Welcome to our deep dive into the United States-China economic rivalry, a global showdown reshaping trade and geopolitics. As tariffs escalate and technology battles intensify, the world watches closely. From Japan's delicate balancing act to Vietnam's economic boom, countries are navigating this high-stakes conflict with strategic caution. In this video, we explore how 10 key nations react, adapt, and position themselves amid the United States-China trade war, revealing the global ripple effects and strategies defining the future of international trade. 10. Brazil. Brazil, as a BRICS member, strengthens economic ties with China through trade in agriculture and minerals, capitalizing on the United States-China rivalry to enhance its global economic role. Facing potential United States tariffs, Brazil diversifies trade with other BRICS nations and ASEAN, maintaining a neutral stance to avoid entanglement in technological or geopolitical disputes. Its strategy focuses on leveraging China's demand for resources while exploring opportunities with the United States and other markets. Brazil's economic pragmatism allows it to benefit from the rivalry without aligning with either superpower. By prioritizing trade diversification and diplomatic flexibility, Brazil mitigates risks from the rivalry, positioning itself as a key emerging market player that balances economic gains with strategic independence in the global trade landscape. 9. Indonesia. Indonesia capitalizes on the United States-China economic rivalry by boosting exports to China, particularly in resources like nickel, while resisting Chinese regional influence in maritime disputes. Facing United States tariffs, Indonesia diversifies trade with ASEAN and the EU, leveraging regional agreements to maintain economic growth. Its neutral stance allows it to benefit from both powers without aligning fully with either, balancing economic opportunities with strategic autonomy. Indonesia's resource wealth and growing economic clout make it a significant player in the rivalry. By fostering trade diversification and regional cooperation, Indonesia mitigates the risks of economic disruptions, positioning itself as a pragmatic actor that navigates the United States-China rivalry with a focus on economic stability and regional influence, avoiding entanglement in superpower conflicts. 8. Taiwan. Taiwan faces unique challenges in the United States-China economic rivalry due to its critical role in the global semiconductor industry and its geopolitical tensions with China. Reliant on the United States for security and on China for trade, Taiwan aligns with United States-led technology initiatives while maintaining economic engagement with China to avoid disruptions. It strengthens domestic technological resilience and seeks broader trade partnerships to mitigate risks from the rivalry. Taiwan's strategy involves careful diplomacy to balance economic survival with security needs, leveraging its pivotal role in global supply chains. By navigating pressures from both powers, Taiwan aims to preserve its economic stability and technological leadership, positioning itself as a critical yet cautious player in the United States-China rivalry, prioritizing resilience and strategic partnerships. 7. United Kingdom. The United Kingdom, pursuing economic autonomy post-Brexit, navigates the United States-China rivalry with a pragmatic approach. It maintains trade with China in sectors like finance and technology while aligning with United States security policies, despite tensions over tech partnerships like Huawei. Facing United States tariffs, the UK invests in domestic technology to reduce reliance on Chinese supply chains, balancing economic ties with both powers. Its strategy emphasizes flexibility, leveraging its global financial influence to engage both the United States and China without full alignment. The UK's diplomatic and economic maneuvers aim to preserve stability while capitalizing on opportunities in the rivalry. By fostering trade diversification and technological independence, the UK positions itself as a key player, navigating the rivalry with a focus on national interests and global influence. 6. Australia. Australia navigates the United States-China economic rivalry by balancing resumed trade with China, particularly in critical minerals, with its strong security alignment with the United States through frameworks like AUKUS and the Quad. Facing economic pressures from both powers, Australia diversifies its markets, strengthening trade with ASEAN and India to reduce reliance on China. Its strategy combines economic pragmatism with a pro-United States security stance, allowing it to maintain robust exports while addressing regional security concerns. Australia's critical role in global supply chains, especially for resources, enhances its leverage. By carefully managing its economic ties with China and security commitments to the United States, Australia mitigates the risks of the rivalry, positioning itself as a resilient player in the Indo-Pacific with a focus on stability and diversification. 5. Vietnam. Vietnam emerges as a significant beneficiary of the United States-China economic rivalry, capitalizing on redirected trade and investment flows. Its booming economy thrives on exports to China, particularly in electronics and textiles, while hosting manufacturing shifts driven by United States tariffs. Vietnam maintains neutrality, leveraging regional trade agreements to deepen ties with China while fostering economic partnerships with the United States and ASEAN nations. This strategic positioning allows Vietnam to benefit from both powers without fully aligning with either. By diversifying its trade partners and strengthening domestic industries, Vietnam mitigates risks from the rivalry's economic disruptions. Its agile diplomacy and economic adaptability make it a key player, balancing United States and Chinese interests to sustain growth and stability in a turbulent global trade environment. 4. South Korea. South Korea treads carefully in the United States-China economic rivalry, balancing its critical trade ties with China, particularly in semiconductors and electric vehicle batteries, with its strong security alliance with the United States. Facing pressure to join United States-led technology restrictions, South Korea remains cautious due to past Chinese economic retaliations. It diversifies trade with ASEAN and other regions to reduce dependence on both powers, while strengthening domestic technological resilience. South Korea's strategy involves maintaining economic stability by engaging with China while deepening security cooperation with the United States through joint military initiatives. This delicate balancing act allows South Korea to mitigate risks from the rivalry, preserving its economic growth and global tech leadership while navigating geopolitical tensions with pragmatism and strategic foresight. 3. India. India leverages the United States-China economic rivalry to enhance its global standing, pursuing a pragmatic, non-aligned approach. While maintaining growing trade with China, India counters Chinese regional influence through United States-aligned initiatives like the Quad. It diversifies supply chains to reduce reliance on Chinese imports, attracting manufacturing investments as companies shift from China due to United States tariffs. India's strategy avoids rigid alignment with either superpower, focusing on issue-based coalitions to maximize economic and strategic gains. By balancing security cooperation with the United States and economic engagement with China, India positions itself as an emerging power, capitalizing on the rivalry to boost its manufacturing sector and global influence. Its nuanced diplomacy ensures flexibility, allowing India to navigate the rivalry while prioritizing national interests and regional stability. 2. Japan. Japan carefully balances its deep economic ties with China, a major trading partner for high-precision machinery, with its security alliance with the United States through frameworks like the Quad. Reliant on Chinese rare earths, Japan avoids fully decoupling but supports United States-led technology restrictions to counter China's influence. It has ramped up defense spending to address regional security concerns while maintaining economic pragmatism to avoid Chinese retaliation. Japan's strategy involves diversifying trade with ASEAN nations and strengthening domestic industries to mitigate risks from the United States-China rivalry. By aligning with United States security goals while preserving economic links with China, Japan positions itself as a key player in the Indo-Pacific, navigating the rivalry with a blend of caution, cooperation, and strategic independence. 1. European Union. The European Union, a major economic bloc, navigates the United States-China economic rivalry with a focus on strategic autonomy. Heavily reliant on China for critical goods like rare earths, the EU maintains robust trade ties while aligning with United States concerns over unfair trade practices and technology security. Facing tariffs from both powers, the EU is diversifying supply chains and boosting domestic innovation to reduce dependence. It champions multilateral trade rules, criticizing both United States protectionism and Chinese subsidies. By balancing economic pragmatism with geopolitical caution, the EU avoids full alignment with either superpower, positioning itself as a mediator in global trade disputes. Its significant market influence and diplomatic weight make it a pivotal player in shaping the global response to the United States-China rivalry, prioritizing stability and independence.